Thank you for joining us. You're watching Notepad. I'm your host, Ibrahim Sani. Today we have on the line, Rohit Nambiar, the Group CEO of Tune Protect. Of course, he replaces Ku Ailin. That was quite an interesting hiree a few years ago, but she left the company less than 2 years. And of course, she has since been rehired as CEO of Zurich Life Insurance. So here we're trying to understand a little bit better about what Rohit has to bring to the table in terms of bringing Tune Protect to another level. Welcome to the show, Rohit.
Thanks, Ibrahim. It's a pleasure to be with you again.
So the last time we spoke, you were in charge of AXA. Of course, times have changed. Let's talk a little bit about the kind of differences that you see from your previous organization and right now here in Tune Protect.
Well, for me, it's a huge opportunity. You can't compare the two organizations because one is a global insurer. The other one wants to be, an insurtech unicorn in this part of the world. So obviously they are in two different spaces, if you may say so. For me, the biggest advantage I see in Tune Protect is two parts. The first one is the access to the AirAsia database, as well as all the AirAsia organizations we have, which puts us in a definite pedestal on the digital insurance side because ecosystem is vital for digital to work. The second one is I find us small enough to disrupt and innovate and not carry some of the legacy baggages. So for me, those are two primary reasons why I think we can, make a big difference. And last but not least, it's very important in an insurance industry for investors and customers to be aware that actually we are well capitalized. All our businesses have between 2 to 6 times the required regulatory capital, as well as internal solvency margins. So I think we are primed to make disruption and a difference in the market.
Being well capitalized is one thing, but of course, bottom line matters the most. And Tune Protect had a volatile year last year. Second quarter was growing 18%. Of course, this was coming on the back of a good first quarter. And then, of course, the MCO kicked in, and then the third quarter net profit dipped close to 80%, actually 79%. And I don't know what your full year is going to be like, but it's not unique to Tune Protect. It's not unique to an insurance company. It's unique. It's everybody was going through the same volatility period. But I'm sure you guys are in a pinch right now to see what 2021 brings to the table.
Yeah, so did COVID affect us? It surely affected us, right? Because travel industry was absolutely smashed. And when the travel industry was affected, obviously we were affected because travel remains a material part of our business and a profitable part of our business. But having said that, I think there's several things that we have done. The first one is we have not taken this head on. We've not taken this lying down. We've taken this head on, right? The first thing we did was we launched a diversification plan. What happened was very interesting. We are back to pre-COVID levels from a travel top line perspective without Malaysia even flying much. So the non-AirAsia business from Thailand, from the Middle East, from Vietnam started picking up for us, which has made good the difference that was there. Obviously, it took time for that plan to kick in and for all these new airline tie-ups to happen. So the first thing was we have not sat there. We've gone and tied up. We just announced a few weeks back a tie-up with Bamboo Airways in Vietnam. We work with Air Arabia and Salam Air in Middle East. We obviously work with AirAsia in the region. Thailand was pretty strong. We've seen broadly 3 trends. The first trend is countries like Thailand, where the minimum sum assured was made quite high. We saw our average ticket size going up. The second one, because for example, in Thailand, it's required now $100,000 minimum travel insurance if you want to enter the country. Singapore just announced from February 1st, SGD 30K. The second trend we are seeing is in many countries, it's becoming mandatory to have travel insurance. Oman, Jordan, and 2 other countries in the Middle East, for example. What we are finding is, for example, there were 100 travelers going earlier and 8 to 9 people would buy travel insurance. Today, we are seeing there are probably only 10 people traveling, but all 10 are buying travel insurance in the Middle East. So our Middle East business has grown quite significantly. Right. However, the third part is Malaysia has been significantly impacted because, of course, the lockdowns obviously meant people are not flying. But I'm very confident, Ibrahim, that when the situation opens up, what normally a pandemic or a catastrophe does, and there's been history with floods kind of scenario, insurance always picks up because awareness goes up. So obviously we are preparing for the travel pickup when it happens, once the vaccines are through, once the borders open up slowly, and we do expect that will take time till the end of the year. But the second part is we've just launched our new strategy, where we've just announced a new strategy where we want to be reposition the group as a lifestyle insurer that everyone loves. Lifestyle, there are three important words there: lifestyle, everyone, and loves. Why do I say lifestyle? Because you notice for millennials, only three things matter: a mobile phone, and you would say not just a millennial today, but it matters to everyone. Travel, once COVID improves, I think people want to travel, and I do believe there would be revenge travel, as Tony calls it. And the third one is health. People want to be healthier. People want to be fitter. Because people understand, Malaysians, 48% Malaysians are, overweight as per many studies. So you will notice that these three areas which link to the lifestyle is primed for digital disruption. So we've launched a new strategy which is predicated on these three lines which link to the lifestyle, and I can talk about it later. And the last word that's very important in this thing is loves. We want to be a customer obsessed insurer. You might tell me, so what's different? It's very different. I'll give you an example. The average NPS of life insurance industry a couple of years back by an independent study was between -6 and -8 in Malaysia.
Sorry, what does minus NPS means?
Minus NPS, sorry, that's a great question. Minus NPS means there are more...
Now I don't want to promote, is that it?
Yeah, there are more detractors than promoters for insurance. You look at AirAsia, it was plus 52. Despite the pandemic, the recent AirAsia NPS was plus 52. So it tells you that there is a lot of room within the insurance space to gain greater trust for all of us. And all of us are working towards it. And that's where we have set out an ambition saying, we want to be a customer obsessed insurer, and we want to be a clear NPS leader in any market we operate in. Almost like an Amazon model, right? They essentially said, we want customers to be happy with us, which means they will buy more from us, they will stay longer with us, which essentially will flow through to the bottom and top line. The bottom and top line are always lag indicators. So this is what we want to reposition the organization as.
Okay, we'll of course touch with the lifestyle element of Tune Protect, but we'll do that later after the break. I just want to focus one more thing here. Some of the partnerships that you mentioned just now include not just boosting the business per se, but of course the kind of services that you offer. This include items like e-wallet, digitization, insurtech, and it's everywhere, right? From Vietnam to Thailand to all the other places that you mentioned just now. What's the story like? I'm sure it's not going to be easy trying to do business cross boundaries using Zoom calls. I'm sure it's going to be a lot of challenge lying ahead. How are you going to overcome this whole conversation of how to make things happen across the borders with the pandemic raging on?
Actually, you'll be amazed. Yesterday, I was talking to a large software house because we're looking for some technology in particular space. And they told me in the last 1 year, all their projects have been done offshore, and all their projects, that's what they claim, have been done within timeline. And frankly, my experience is no different. I'll just give you one example. Yesterday, we had to go live with the new Singapore requirements to ensure our products meet the Singapore requirements. The product went live 12 days before the deadline. I feel people have become more efficient because today you have a balance between working from home. We are an essential industry, so people do come to work. There's been a nice balance that's been struck. We're not losing time in traffic. We're not losing time in unwanted stuff. People are a lot more focused. I do not believe that pandemic has impacted our work. In fact, I think the pandemic has made us much more efficient and faster. The pandemic has other issues. Other issues are our agents, for example, cannot meet their customers, so we have to do it digitally, and there are some challenges around that. But from an execution standpoint, the pandemic hasn't stopped us. We executed Bamboo Air totally sitting at home. We just went live with Busy Bee in Thailand, which is a CRM, which is a reward platform. Again, sitting away from at home. We executed lots of hotels in UAE. So we've been executing a lot of Boxku in Malaysia for basically consignment insurance coverage. All of these were done without even meeting anyone. Sitting at home, boom, we executed.
Fantastic. Okay, we'll go for a short break before we continue on our conversation with Rohit of Tune Protect. We'll be right back after these messages. Welcome back. I have with me Rohit Nambiar. He's the Group CEO of Tune Protect Group. He was just hired late last year, so there's a lot of things that needs to be covered. Let's talk a little bit more about the products that Tune Protect has. Rohit, it's undeniable that Tune Protect is married to death, I suppose, with AirAsia. And because of that, there's a lot of products that are related to travel, that is related to lifestyle as well. Of course, when we talk about tourism, insurance, those kind of stuff. And people don't normally, I don't know your business, but I wouldn't assume that people would associate Tune Protect to insuring other things other than, say, products related to AirAsia. So am I correct in my assessment here?
Actually, it's a very good question, right? Sometimes, first of all, I'm extremely privileged to have AirAsia as an investor as well as a key contributor to our business. And I believe personally, and one of the reasons why I took up this job is I do believe we haven't done enough with the AirAsia ecosystem. And I'm realizing that there are many AirAsia companies who don't even work with Tune Protect today. Do you know that? So that's the opportunity that lies. But having said that, let's keep two things in mind. AirAsia contributes roughly about 15% of our business, plus or minus. Of course, during COVID pandemic, it's different. And AirAsia is roughly, with Tune Group plus AirAsia, owns about 29% plus or minus of the company. So remember, 85% is still outside of AirAsia. Remember, 71% of our investors are also outside of AirAsia. Now, within the outside of the travel business, motor still is about 30-35% of a Malaysian business, as an example. But we are come up with a new strategy which we want to change. The new strategy says we want to have 40% of our business from health, 40% from lifestyle, and 20% from SME and other lines of business. Let me try to explain that a little bit more. Health. We believe the biggest opportunity in Southeast Asia is for health insurance. Why? Because the health insurance model is broken. I have written extensively about this on my blog and various other places, because the health insurance business is made for affluent and mass affluent people. That's why health premiums average 2,500, 3,000 ringgit on an average. Of course, there's some exceptions. But there is a model there for like an AirAsia type proposition. What do I mean by that? Instead of, what did AirAsia do? AirAsia said everybody can fly, which means you get a seat. Now, which seat you sit in or what food you eat, you have to pay for it. The same way, we want to take health back to the basic, which is we want to cover more of the M40, B40, millennials, younger people, by saying we can give you a cover which is probably a fourth of what you find through traditional, ways of sales that was done previously, and we can offer that online. But if you want more complex products, our agents or distributors will click in because they have to give you advice, and obviously those products will be more expensive. And these products will be much cheaper. And then if you want add-ons, we can add it on. I'll give you a second example on health, a very interesting example. We are launching a new product. Typically in the market, critical illness is like a war going on. Somebody says, I cover 64 critical illness. Somebody says, I cover 38. Actually, I always ask you, just go and look at those 64 illness and tell me how many of those you even heard of. You would not have heard, at least I haven't heard 50 of them. But the opportunity for us is if we launch a 2CI or a 3CI, which means just cover cancer, heart attack, and stroke, because these three are the most common, critical illness. The premiums would drop. We give basic coverage for the biggest issue, and then they want to add on, they can add on. The same with lifestyle. It's products like e-wallet coverage. So if money goes out of your e-wallet, you want to be protected. Gadget insurance. Travel, we have 11 types of travel insurance products in the Middle East in one company in particular, because we cover travel delay, baggage delay, there are many things there. And then there is obviously PA, home insurance, and so on and so forth. So in the next 3 months, I can give you an idea that in February, we are launching a new online health product for millennials. In March, we are launching a new online home product. In Q2, we are launching a new critical illness product, which will be launched in Thailand in Q1. For me, the biggest opportunity is because we are present in multiple markets. We are small individually, but together we can become big if we follow the centralization model of the Googles and the Amazons of the world, which means each of us develop something in country A, and if we can port it on to country B, country C, together we can launch a lot more propositions and services. Our app has also been launched a couple of months back, and we're enhancing it so the customer can do a lot more on their own app. And last, SMEs, which is the backbone of any revival of any economy. There are two kinds of SMEs: one who buy insurance, the second is one who doesn't buy insurance. Why do I say this? The one who buys insurance is frustrated because we are dumping large corporate products on them. The one who doesn't buy insurance, why don't they buy? Because we've done focus groups on them. They find insurance expensive. They find insurance expensive, costly, complex, and difficult to understand. So again, if we can simplify the product, make it available simple with limited underwriting questions through an agent for advice or through online for simpler products, then you're breaking that chain and you can give them modular products which the customer can buy. Underpinning all of this is the data foundation we are building, because I think with this whole journey that we are taking, which is health, we'll get a lot of data, activity data, wellness data, lifestyle data. We also have their travel data, etc. We can then do a lot more with AI and ML, which is in terms of cross-sell, upsell, insurance, and so on and so forth. And that's going to be at the core of what we do. Because what I want to create is, just like today we have travel tech, which is our strength, which is we offer travel insurance, travel reinsurance, a technology platform that can issue 25,000 policies in a day with no issue, and an API integration. And that's why many of these companies I was talking to abroad work with us. We want to create that within lifestyle, health, and SME. And that's really the game that we want to play.
The problem still remains when we come to the pandemic. A lot of people still want to stay home a lot, yeah? And because of this, they will rethink about the kind of things that they need, anywhere from travel needs to subscription services, for instance. And when they reassess the kind of payments that are coming out of their wallet, I don't know whether insurance is going to be top of mind. I'm sure they will be thinking about other things, right? When it comes to managing their fixed cost and of course managing their variable cost moving forward. How do you intend to be top of mind for the consumers out there when they are already dug in terms of getting their heels dug in and staying at home at least for the entire year of 2021? How do you entice them to come out from that particular thinking and try to buy your products?
Great question, Ibrahim. There are three parts to this question, right? Three parts. The first one is the consumer who already has insurance and is reviewing his or her purchase. And that's exactly what I mentioned to you. That's why we want to create optionality for them to say, you can buy a basic product, or you can buy a more comprehensive product, or you can add on just what you need. So we will modularize the product for them. And that's what we're going to do with the products that we are launching. What that means is it gives them an opportunity to potentially reduce their value where they feel they don't need to have that much exposure. But we always say, please ensure you do proper financial need analysis to know how much coverage you need. The second is a group of people who realize now, oops, I'm not covered and I better do something. There was a research by one of the research firms, I don't know if I can quote them, so I'll just say research firm, which said 30% of consumers in Malaysia want to actually increase their value in insurance. And I won't be surprised if this is seen in other markets, because suddenly people realize, oops, my coverage is not enough. Do I need to cover A? Do I need to cover B? Of course, by nature, some products will be bought lesser than other products. Some people may not buy travel insurance now because they're not going to travel. And it's a very fair argument. But they still need personal accident. They still need health insurance. They are running SMEs. Millennials are the largest SMEs today. They need to cover, and now they're even more worried. There's a loss of income discussion, which is what happens if I lose income during this time. Could we cover that? So I think a whole host of differential propositions will come together. And that's why we also want to create the bite-sized insurance, which means you don't hit them hard. For someone who's earning 3,000 to 4,000 on an average, if you tell them, I'm going to charge you 300 ringgit a month for premium insurance, you are absolutely right. They're going to drop it. But if I tell them your premium is going to be between 10 to 50 ringgit, depending on which product you buy, it's a completely different, discussion. We're also discussing with various partners on how they can give insurance to their customers for free, where the partner picks up the cost, but it helps them on their core business. For example, telco partners. We have a telco partner with whom we give PA to their customer. If the customer maintains a certain balance minimum, the amount is paid by the telco because they are hoping this customer will stay with them longer, but at the same time, the consumer is getting value. The third and the last one in this whole discussion is, I think it's very important also during these difficult times to understand how can we help them better and where can we help them better. And that's why for me, I have picked out these segments, which is SME. SMEs need to come back to their feet for Malaysia to be back up and every country in the world to be back up. So we want to focus on SME health and bite-sized lifestyle needs, which can then help their customer. I'll give you an example. We have a dental plan consumer can buy online. We're the only company who has a dental plan online. And we know the cost of a root canal treatment or a dental procedure these days. And that's why we are creating these kind of products, which are different from what you would find traditionally available.
Let's talk finally on the topic of your own investors, people that have an interest in Tune Protect. Share prices have taken a hit since hitting 56 cent earlier in the year. It's around 39 cent, even 40 cent, and right now as we speak, this puts your valuation at around 260, 270 million ringgit. What's your message to these kind of investors moving ahead when it comes to thinking about Tune Protect?
I think our ambitions are very, very strong. Otherwise, as you would realize, I wouldn't be here. I think we are here because I believe that with the AirAsia ecosystem we have, with the opportunities we have rebuilt the team. I'll give you just one example. We have a new CEO in Thailand who's really ratcheting up the Thailand business already. He is just like me. He's worked with several multinationals, health background, strong health background. So now he's not only the CEO of Thailand, he's the health leader for the whole group. So he's taking care of health propositions in Vietnam, in Malaysia, in many propositions that we are launching. So we have a new technology officer at the group who comes from a strong telco background. So he brings a different mindset, plus the existing people. So we've rejigged the team because the organization is only as good as the team. But from an investor standpoint, I think what we are saying is we can create something unique. We can be an insurance player, which is going to be a preferred lifestyle insurer that everyone loves. We believe we can make insurance really simple. And that's why we changed our tagline from protection made easy to insurance simplified, because we want to take that topic head on. And our future is we will expand our business. That is a given commitment. We spoke at the investor day we just had. We do believe that the time is to expand our business, because what I'm saying is the idea now is we're centralizing technology in Malaysia. We're centralizing technical excellence. We're centralizing a lot of capabilities. The idea then is we can set up multiple business lines, multiple operations, and the cost will be quite discipline versus what it is today, because you will start using more of these services. It will get proportioned out, and it's going to be the same technology. We don't need to create technology in each country, which is the traditional model. Here we create one technology which can be deployed, because we're going to focus on only 3 lines of business going forward. So every country, every business that we expand into, focus on the same 3 lines of business. And that's the benefit that we will have from a cost synergy and business efficiency standpoint. Our issue for the investors, I said this at the investor day, our issue is not an expense issue. Many times people say, oh, our expense is high. Our issue is 2 parts. One, our top line wasn't growing. So we have to redo.
But it's not you to blame. It's like the industry is problematic right now as we speak. That's the issue.
Yeah. The second one is we weren't retaining enough. Traditional companies retain 70-80%. Our Thailand business retains between 20 to 25% plus or minus. Our Malaysian business retains 30 to 35%. So we were doing businesses where we were essentially just fronting and passing it on to reinsurers and others. So today, with these 3 lines of business, these are businesses we can retain much more. These are businesses we are absolutely convinced are profitable. That's what our underwriting surplus says. And these are businesses which are primed for disruption. And finally, these are businesses where technology plus innovation plus the access to the ecosystem we have with AA will help us make a massive differential. I'll just tell the investors one thing. Today,
Yeah.
I have access.
But wouldn't they be so concerned with a churn rate of 70-80%? Any businesses would be very troubled with that, right?
No, we don't have a churn rate of 70-80%. Let me repeat. I'm saying retention ratio. Our retention ratio, which means what happens in insurance is you sometimes have reinsurer. So you pass your business on to the reinsurer. So what was happening in some lines of business, we were retaining very little and we were passing on more profit to the reinsurers. So I'm saying today we will do some of that, of course, but we want to move away from those lines of business and focus on lines of business where we can retain more, which means we are fronting it, we are owning it, which means our top line and bottom line should be better over a period of time. The last point on the question you asked is, I think it's very important for investors to understand this is an important period of change. And in this period of change, our biggest benefit we have is the access to the customers. Today, we have access to 120 million plus customers, and I would argue it's even more because AA, but also of the other airlines we have, plus the e-wallets that we have signed up in Vietnam and many other countries, and Thailand recently as well. And what have we done so far? We've been selling through AirAsia, we're selling travel and PA. We haven't been selling much more other than a few corporate insurance. We've not been selling much more. But the opportunity now is, can I sell health? Can I sell lifestyle? Can I sell gadget? Can I sell, SME? That's the opportunity. So for me, it's a very exciting time for the business because we are pivoting and we are pivoting into an area which I believe we can create a unique company out of Malaysia for the whole region, leveraging the expertise we have.
Thank you. That was a very interesting chat, Rohit. I wish you all the best. Of course, you've just been hired, so there's plenty of things that you need to be done. But for now, that's it for this conversation. That was Rohit Nambiar, the new Group CEO of Tune Protect Group. Until then, thanks very much for watching and goodbye.